Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Great to see everyone. All right, see the questions coming in already. Awesome. All right, so there are a couple questions that I've been getting about the fall trading season and about September and October. And these are important questions because they revolve around what can we potentially expect. Oh, you know what? Thank you, bot. I know I'm supposed to broadcast to our free trading room. And we are live in the free trading room as well. All right. So one of the things that I wanted to kick off our, oh, do we not have audio there? Hang on, bot. Thanks, gang. Bear with you one moment. I love technology. I do. All right, let's give this a whirl. But I'm going to get into some very cool stuff with you all here this morning regarding seasonals and what we can actually expect going into this this fall trading season. So free trading room, great to see everyone. We are good to go in all the rooms. Excellent. The question I've been getting a lot of, and it started off with Natty Gas in terms of the winter seasonal. And I said, look, as we go into August, September, October, most of the pre-winter run-up is done. And that just brings in the other conversation about, well, what can we expect for September, October? Now, remember, gang, really important. Maybe write this down somewhere. Seasonals are not setups. That means that there's a tendency that the market might see, but it doesn't mean it's a trade necessarily. But I'm going to show you something here really cool. And it is a seasonal breakdown of the S&P. So we're looking here at the SPY for the last 29 years. Now, two really important things. I see seasonals abused, misused, and just incorrectly interpreted a lot. I used to do the same thing many, many moons ago until I realized there's a couple really important things when you're looking at the seasonals of the indices, the seasonals of anything around the stock market. Remember, gang, the stock market is designed to keep moving higher. And if you think about what, let's say we look at a weekly or even monthly view of equities. This is a weekly chart of the S&P 500. What has it done for 11 years here? It's moved higher. What happens is a lot of times when traders jump into seasonals, they forget you got to detrend the thing, right? You got to take that natural inclination to keep moving higher overall and say, okay, what do we typically do every July? What do we typically do every August and detrend it? When you look back 29 years, you look back 30 years, you'll see where the, oh my gosh, here comes September, October comes from. You go back about a decade, it's still there. You can see that really clearly. But you go back 5 years, it's very different, isn't it? Compare the 29-year look back. Look at what happens here. And then take a look at the 5-year look back. How about even less than that? What if we just look back a couple of years? We just go 2020 to 2022. Now, do I not have enough data points for that? Oh, that's too bad. I thought I might be able to do that. See if we can't do 2018. Okay. So 2018, so we're getting even a tighter look. I'd like to do 2019 or 2020. There is absolutely an inclination for the market to head lower, no doubt. What I want everyone to remember, though, is if the Federal Reserve is going to continue to ratchet up, and I was having this conversation yesterday. A lot of folks were asking me, Rog, why are you so bullish? Don't you know what's happening? I hear you. The structure is still neutral. We haven't taken out June lows. Why would I presume that we're circling the drain, right? What do we know? We know that we're going to get a pretty beefy rate hike. We know that by the end of the year, we're going to be at a higher target rate probability than we presumed we were going to be at for the first 8 months of the year. So we've realigned with a 1/4 point more hike. And then in February, we will continue to hold that. And now the wild card has become slowly, although a little bit less so today, March. In March of 2023, do we see another pesky little 1/4 point rate hike, bringing us that target rate probability of 4% to 4.25%? If these columns continue to indicate a higher target rate probability, again, we're going to see more strength in that. We're going to see, well, actually, we're going to see more strength in the yields. We're going to see dropping bonds, but we're also going to see dropping indices, dropping stocks. That's the way sort of the dominoes fall. All right. So as always, gang, our Charts and Coffee show is about your questions. I want to take a look a little bit with you all at the seasonals that we're dealing with right now. And when you look back 30 years versus 10 years versus 5 years, it's not a set thing. I want everyone to realize it's not a set thing. And that, frankly, what the Federal Reserve does between now and then is going to have far more impact than some sort of inclination for the stock market to drop in September or October, although that overarching expectation should certainly be in the back of our minds. Okay, so let's get to it. Kicking it off with, hey there, Victor Ben. All right, good morning. Can we please take a look at the SPY? Sure. 15-minute looks like we've completed a leg, and oh, Victor, you know what? I think it's so important for the folks on this end of the mic and this end of the camera to say, I don't know what you mean by leg A, leg B, if you're looking at Elliott wave or something, so I don't want to presume that I know what you're talking about, nor do I want to say that's not correct, because, I really don't know what it is you're measuring. And I think it's really important for folks here to every now and say, look, I don't know every type of trading style. What I can tell you is, let's see, you're targeting 390. My friend, this is a 5-minute chart. Let me go to the 15. This is a 5 or 15. Let's go to the 15-minute chart. Okay. So this is a 15-minute chart and I love the question, right? Because it just reminds us that there's so many ways to understand what the market is doing. I think there's only one way to manage risk, but there's so many ways to understand what the market is doing. I have an overall uptrend here, my friend. So I don't have a target of 390 that I could consider, because my rules would say I've got a ratcheting hourly price movement range set of levels. My wave is sloping higher. My candles are green, and the structure of the market is also green based on the 8, 13, 21, and 34. So, if we hit 390, I'll definitely be thinking of you, Victor Ben, but I don't have that as part of what I can consider based on that current look at the 15. Love the question. Reminds us of, just again, a truth of the market, which is there are many ways to look for opportunity. Frankly, there's only one way to manage risk, but there are many ways to look for opportunity. All right, next question is Archer Daniel Midland. All right, all my cards on the table. I do have a long position here, Sam K. You're asking, so I'm guessing you do too. On the pullback yesterday, what did we do? We bought, and we're pretty much sitting near the previous session close. I would have loved to have seen a gap. That would be great. But as long as we're holding above the wave, as long as we're holding close to yesterday's close and high, I think we're fine. And again, I've got long calls here, so nothing I'm really changing my mind about on Archer Daniel Midland. Thanks for the question, Sam. Hey there, Jose. All right, what do we have in Southern? XLU was a big part of our conversation back at the Sector Secrets Master yesterday. And Southern is one of my favorites within it. Great structure. Do we like, look, we have Southern, we have Duke. There's NEE, which is the number one weighted name within the utilities. Bear with me one moment here. Let me get this freshened up. There we go. NEE. The challenge is, do we have structure in any of these? Now, we do have, we've been looking for a long position on XLU based on the structure, the bullish structure, the uptrend that we saw going into the end of August. And it's not that I'm playing defensives in XLU and XLP, but rather these are just trends that are going to benefit from overall risk appetite, as well as if there's a little bit of risk aversion, these could probably be a little bit more supported in an environment where there's a little bit more fear, a little bit more panic in the market. So SO is part of a narrative I really like. Jose, what I would say is let's focus on the double green stocks within XLU. All right. All right. Next up, XLE, Oxy. Do they look like they're ready for entry? So, Robert, again, another great corner of the market we discussed quite in depth in the mastery. And no, I'm not really keying up XLE. No, not at all, my friend. And Occidental would be a second tier. Let me look at my notes. So my Sector Secrets Mastery folks, take a look at the notes from yesterday, our little daily newsletter, if you will. And you'll notice, let me share with you what we talked about yesterday, Robert. XLE, so this was the distinction within XLE. XLE does have, and this is straight from my notes, XLE has 3 double green symbols, EOG, COP, DVN. The second tier buys would be OXY and MPC. What's really interesting is those 3 names that are moving higher overall in XLE have also a foot in the natty gas narrative, the oil explorers narrative. So we've been focusing on that corner of the market more so than XLE. Because remember, XLE is tied more directly to the crude narrative, right? That's where I would really be hesitant to dedicate too much capital to OIH names or XLE. Thanks for the question. Hey there, Off-Road Bear. Good morning. Oh, thank you so much. Yes. Look, if this is a needle moving show for you, if the discussion preps you for the market, I am both thankful that you're here. So I'm not talking to myself or my cat, who isn't even with me here today. But thank you for joining me here in the office. And yes, if it's moving the needle for you, smash that like button. And if it's not, Rog, I'd really like you to discuss whatever it is, leave it in the comments below. Okay, next up, let's see. Nick asks, what were my biggest developmental breakthroughs in becoming consistently profitable as a trader? Risk management. See how quick I had that? Risk management, period. Risk management, that umbrella of risk management includes position sizing, risk reward ratios, and understanding account risk. Not just risk per trade, risk of that trade to my account. Easy to answer. That was, to your question, the developmental breakthrough. Always. And it's the unsexiest thing, isn't it? But that's it. It wasn't a secret squiggle. It wasn't a strategy. It wasn't a symbol. It wasn't a time frame. That was really it. Did I ever doubt my potential? I really didn't. My thought was I tried to find examples of people who were doing it. I tried to find examples of people who were successful investors or successful traders. Now, you got to remember, in the late 80s, trading wasn't something that was mainstream. In the early 90s, trading was not something that was mainstream. It was, my mother's nickname is Gulu. Oh, look at Gulu's eldest. She's basically a degenerate gambler. Because I was trading in the 90s and no one knew what that was. I remember the first time I took my trading statements to my accountant and said, make heads or tails of this. Trading wasn't a job. They didn't know what to do. I remember there was 3 or 4 of them around the desk going, we don't know what to do with this. I mean, it's clearly your job, but it's just a 1099 that you have. So these were all things that were just back then. Nobody had any roadmap for. So I tried to find people basically by searching and phone calls and letters, in my teens and also in my early 20s, when I was really starting to take trading seriously. I just tried to find people who were doing it successfully. Luckily, I had the example of my mother in the home, who was a fairly active investor. So I knew it was possible, right? We can focus on the folks that are failing. We can focus on the folks that are succeeding. And if we give our minds an example of what success looks like, then, there's less doubt. That was my thought. So I hope that helps. All right, next up, Hey, Raghee, is Powell this morning a 9-10 market mover? Powell is always, hey there, Marla. Anytime our good friend Jerome is on the calendar, is on the schedule, it's always going to be potentially a market mover. Are they all going to be equally as volatile? No, of course not. Of course not. You know what? Right now, we know, what time is it? He's been speaking conceivably for about 5 minutes. And if I take a look at the intraday chart, we've been sort of creeping lower. By the way, if you're wondering, what was this candle? That was the ECB, gang. That was the ECB hiking 75 basis points as expected. A little bit of volatility right around that, and then kind of creeping a bit lower since then. Are we creeping much lower than a range that we've seen through most of the Asian session since yesterday's close? Actually, yes. Breaking that 39.70, 39.68 area, that is a breakdown that we really did not want to see if we're bullish. Although, we'll see what happens after the bell and definitely after 10 a.m. But yeah, anytime Powell is speaking, I'm going to presume he has the ability to move the market. I'm with you. Next up is let's see, 7 days to go. 7 days to go for what? 7 days to go. Oh, for the FOMC. Yes. 7 days to go for the FOMC. No, wait a minute. 7 days to go for what? Today's the 8th. So the FOMC is on the 21st. Yeah, 21st. All right. Next up is, let's see here. That's Victor. That's Elliott Wave. Yeah, I am. The Elliotician here, Victor at Simpler is Mr. David Starr. I would not even pretend to be fluent in Elliott Wave. I understand the concepts. I understand some of it, but yeah, not familiar enough with Elliott Wave. So thank you for the question, but I think it's really important for someone in this position to be okay with I don't know, because as broad as my bookshelf is back here, the things I don't know would be about 14 times that size. And that's okay. You don't need to know everything. Wonderfully, you don't need to know everything to be a trader, to be a successful trader. Hey there, Adrian. S&P takes into consideration the 500, right? The 500 companies weighted within it. Yes. So by definition, it should always trend higher. That's what it's designed to do. I agree. And is it a stress-free long-term investment? I'll tell you this, Adrian. If Grandpa Buffett says if he were to start over today, he would just put money in the S&P 500, who am I to argue with that? So my answer based on that would be yes to both. It is designed to continue to move higher. And I don't know about stress-free, but when we take things out to a longer term time horizon, it's hard to beat the S&P 500. I'm with you. Yeah. And so is Grandpa Buffett. All right, next up, Coco. Hi, I'm an Indian college student who is trying to figure out trading and technical analysis, but keep failing and I'm confused. How can I navigate this industry and get good at it? Well, when you say industry, and you're meaning you want to become a trader or you want to become an analyst, because those are two very different jobs. I would say so my process was this. I don't know the best way, but I only know my way. My process was to find a mentor who resonated with me. That mentor happened to be Charles Dow. Charles Dow wasn't even alive. A lot of you know, Rog, you were trading in the 80s. Charles Dow was long gone. Absolutely. Our mentors can be books. Our mentors can be writing. They don't have to be people that are sitting next to us and telling us what to do. We have to embrace a philosophy first. Otherwise, we're going to be too tempted to do too much else. So I studied as much as I could and settled on Dow theory. Every indicator that I created, every process that I've since either developed or embraced has been on the foundation of this is what I believe. This is my foundational principle. This was my reading, writing, and arithmetic, right? This is the foundation upon which everything was built. So that was Dow theory. I don't know what that's going to be for you, but in the beginning, take it all in. study a little bit. Don't worry about that jack of all trades, master of none. There's a great book by David Epstein called Range. If all of you are wondering, do I have to be a specialist in something? Read Range. It will open up your mind. So try to understand as much as you can. Let one thing be the main focus and then go from there, right? Don't worry about what's best. Worry about what works for you. That's the best way to navigate it. Find a foundation and then let that be the filter through which you develop the rest of your strategies. That's how I did it. That's the way I did it. And that's really, and Ari, I appreciate that. I think the most important thing as a trader who's within the simpler community is every single trader has a foundation. So rather than, and this is just my 2 cents, rather than finding out what are you trading and what do you think of Tesla, right? What I would say the best use of having all these minds under one roof here at Simpler is, what's your foundation? What's your main belief that everything else is built on? Maybe it's trends, maybe it's volume, maybe it's momentum, whatever it is, what's the main? And then once that foundation is what resonates with you, follow that trader, right? Trying to follow everybody is like trying to cook, a recipe with 9 different versions of it. It's just going to be a mess. So that's my approach. All right, gang. So as always, thank you so much for joining me for Charts and Coffee. We're here 5 days a week, Monday through Friday, 9 to 9:20, right here at the Simpler Trading YouTube channel. We're in the free trading room Tuesday, Thursdays, and Fridays. All right, gang, be good to each other. Hope that helps. And I'll see you all mañana. Be good to each other.